Welcome to Business Middle East. In this episode, we focus on the U.S. Federal Reserve's decision to keep interest rates unchanged and the impact of that position on Middle East markets. The interest rate's fate is hanging in the balance amid controversial statements from decision-makers at the Federal Reserve. Last December, the intention was to raise interest rates by June. Since January, however, it seems patience is the key, as last week the Fed advocated a preference for maintaining the current interest rate for a longer period of time. Positivity faded in the aftermath of Fed statements, while question marks then emerged about the feasibility of possible rate hikes. At the same time, negative signs appeared in the Middle Eastern markets.
Policymakers at the Fed's Open Market Committee were reticent about interest rate increases last week, opting to keep the current position for a longer period. Shortly after announcing its intention to hike in June, the Fed retreated from that positive tone to a dovish one. The timeline for an anticipated increase has now been pushed back to the end of the year. The surprise was that for the first time in 10 years, the US central bank referenced international developments, including the global economic slowdown and falling oil prices. These, it said, have adversely affected the prospects for US economic growth. The latest data, which showed negative figures for this month, have pushed the Fed to request more time to achieve the desired inflation rate of 2%. The Fed's statement of a delayed hike, with its implications for money supply, encouraged the markets, and Wall Street ended the week on a high. In the Middle East, however, the reaction to the overall negative tone of the Fed comments brought Gulf markets down. Saudi Arabia slid by more than 1%, while Egypt dropped 0.59. Abu Dhabi and Qatar fell as well, albeit less severely, 0.12 and 0.52 respectively. Analysts pointed out that Middle East North Africa markets are particularly affected by the movements of central banks and drops in oil prices.
As we do every week, we join Noor Eldin Al-Hamouri, Chief Market Strategist at ADS Securities in Abu Dhabi, for further analysis of the implications of the Fed's moves. Hello, Noor. The Fed retreated quickly again. It seems there's uncertainty among decision makers. Why is that?
Well, this is what we warned about here on Euronews in December in the previous season of Business Middle East. We noted back then that the global economy and the US economy are not on the right track. That's why we are not surprised by the Fed's retreat. However, in the current situation, there's no inflation pressure on the US. In fact, there's what's called disinflation, which might lead to deflation in the future, especially as oil prices remain lower. And until now, there are no clear signs of a recovery of this huge oil price drop. Moreover, we should not forget that about 88% of the latest US economic releases in February were disappointing, while only 12% came in positive. Therefore, there's no major reason for a rate hike anytime soon.
In spite of continuing negative data, why did the Fed originally intend to raise interest rates next June? Could this affect their credibility?
The Fed hinted at a potential date to raise interest rates. The hints were based on future expectations. However, here at ADS Securities, we warned that the US economy will weaken once the Fed stops QE. This is what we see now, and what was also seen after ending QE1 and QE2 after the financial crisis. However, the Fed always tries to maintain credibility by staying on the safe side, being careful with its words and using conditional language. For example, in its statements, the Fed says things like, if the economic data keeps on rising, this might lead to a rate hike sooner. Meaning, if any negative data shows up, just as it has now, the Fed can easily change policy without damaging its credibility.
يقول أن هناك لدينا نوع من التراجع مرة أخرى.
Let's look at Middle East, North Africa markets. Why did we see a negative reaction last week after the Fed meeting? Are there any other factors behind this?
For
the first time in more than 10 years, the Fed mentioned international developments, including Asia, Europe and the US, and for sure the decline of crude oil prices. This fact, of course, has a notable impact on the Middle East. However, after the Fed's statement, the markets were volatile over the interest rate hints and closed in the red for many reasons. The earnings season wasn't perfect. The latest numbers released in the Gulf were disappointing. Many companies missed their targets and the earnings per share came in lower. Moreover, the recent developments between Egypt and ISIS in Libya increased fears for another regional war, which led to a sell-off.
Well, let's see how it goes in the next Federal Reserve meeting that takes place on March 17th, when they'll discuss monetary policy. That's all for now. You can watch our channel on YouTube Euronews Business. Thanks for watching and have a nice week.